let me say one thing clear to everybody. When it comes to taxes and filing and all of this gain and losses and all of this, most likely the IRS has the burden to prove the income, and the taxpayer has the burden to prove the deductions and the expenses.
Okay.
If you look at it from this perspective, if I buy a house that's worth $1 million for $500,000, now I have a gain of $500,000.
Oh, yeah.
Uncle Sam wants his share of that. Where is it going to come?
Right.
Now or later on? So this is where the whole thing comes into play,
Okay.
where I give my kid a house that's worth $1 million for $500,000, but I gifted him $500,000, and there is a gift tax return to be filed.
Right.
Now you file a gift tax return to establish the basis for the kids to say, this is now I gave you a house for $1 million.
Yeah.
I gifted you half. You paid me for half.
Right.
Now if the kids sell the house, okay, his basis start at $1 million.
Okay.
Now, when you look at it from gift perspective, there is specific rules about that. You pay taxes or you don't have to pay taxes. There is exemptions. There is other things.
Yeah.
But the fact you established that basis, you gave them basis for the future, properly documented by the IRS. And most likely is acceptable if it's close to fair market value that you use for the house, is acceptable by the IRS, and nobody can challenge this transaction.
That's the key, is to document it, because when we do a real estate transaction, let's use that example, $1 million house, we're going to do a gift equity, say, of 300, so that they can, not be in a PMI situation. So on the HUD settlement statement, it's going to show that the house price was $1 million. There was a $300,000 gift of equity. Seller, received a check for $700. We'll keep it simple. We have to report the sale of the property to the IRS as $1 million. Exactly. That was what was on the deed. That was the technical sales price. So the IRS is thinking $1 million transaction occurred. And unless you file that gift tax return, there's nothing really to prove that the seller didn't get $1 million.
Right.
And there's nothing to give the buyer a true step up in basis to $1 million, so that when they go to sell the house someday, that will be factored in. So that's the key, is sort of working with an accountant and understanding how to document it the best way, so that everyone's getting, both buyer and seller, both parent and child, are getting the best tax treatment possible.
Exactly.